What's going on, team? It's Caddy with Money Investing. So what a day it's in the markets. We are continuing on this sell-off on the week. So let's go over to our main watch list. S&P down over 2%, the Nasdaq down over 2.5%, almost 3%. What's up, T's? Nice to have you on board. We're gonna quickly go over some of those things. So very excited to take a look at the markets. Nope. And we're gonna launch Bloomberg. See how many people we have. So 12 people watching. We're gonna take a quick screenshot of this thing. So this is the market right now. What do you guys think of this? What do you guys think of this bloodbath over here? Absolutely crazy. Yep, I agree, Rita. So this is wild. I mean, it's not even a rotation at this point. It's just straight up down. It's not even that any sector that we can make an argument, okay, well, you know, money's flowing away from tech, it's going to energy, or it's going to, what is it, where is it going, banks? No, it's just all deep red. This is just insane. This is crazy. Let's see if there's anything going on at Bloomberg that we can listen to.
And on that big momentum trade anymore. This is all retail, and they're moving the market in a really big way, man.
So look at that. Over 80% of the S&P names are lower.
Kriti, thanks very much. Kriti Gupta there talking to us about the market action today, and there is a lot of action to talk about. Still ahead, Colony Capital shifts to digital. We're going to discuss how the firm is transitioning.
Others, you're absolutely right. We're going to talk about that. Good companies getting crushed. We're going to talk about that.
Infrastructure spending that this country or that country may see.
So we're going to circle back to that, but look at this. I mean, just running to GME by selling all stocks possible. I mean, that could be possible. I mean, GME is up what, like 85% the last time I checked, 87%. It's up as high as 171, and you know, Twitter was up over 11%. That's sold off. Everything else, like, there's nothing that's less than 1% down, other than stocks that were already beaten down quite significantly. But Amazon down over almost 2%. Microsoft, Visa, Netflix, Facebook, Apple, Google, Qualcomm, Alibaba, Lemonade, Square, Fiverr, Baidu, like, it's everything. Like, you go over to my financials and banking watch list, everything's deep red. If you go over to EVs, everything's just deep red except for Workhorse, which has already been beaten down so aggressively. If you go over to some of the growth, everything except for Pubmatic, which is interesting because that's one of the stocks that we covered in our February 2021, you know, 3 stocks to buy, sort of like a swing trade positions, and I covered that stock when it was at like $40, and yet today it hit a high of $74. This right here was the entire trade plan for Pubmatic. And you'll notice that, you know, because of this whole market weakness, we sold all the way down to our second support. So I mentioned 45 is going to be the first level of support, and this $38 is going to be the second one. If you did get a position in there, I mean, you're sitting pretty with over 100% gain almost from today. So this right here was an enormous move to the upside for Pubmatic. But like, this chart is just crazy. I mean, you just it's not even, the money's not even flowing. It's just mostly profit taking. It's mostly rebalancing portfolios, and it's mostly happening because of the yields, right? It's not so much about GameStop either. So if you go over to our main watch list, look at the yields, up over 9.5%. You know, 1.5 it's trading at. It's trading at over 1.5. Now, if you were, now, I actually posted a video today, so I would highly encourage you guys to watch that as well. We had an interview with Daniel Labs from Redbird Securities. You know, great interview. I had a lot of fun chatting with him about the markets. We talked about tech versus growth. We talked about Apple in more detail, about what their iPhone 12 super cycle is going to look like in fiscal year 2021. We talked about Tesla's market cap. He has a bull case price target on Tesla of $12.50 and a base case price target of $950. I'm going to say that again. Canada, if you're thinking about, you know, whether Tesla is a buy, he has a bull case price target on Tesla of $12.50 and a base case price target of $950 on Tesla. He believes that Tesla is going to be breaking through over $1 trillion market cap. For Apple, he has a price target of 225. That's going to be the bull case, and base case at 175. For iPhone 12, he believes there's going to be substantial growth for iPhone 12s based on launch trends, based on a lot of other checks that he's running from manufacturing, supply chains, so on and so forth. Let's check out the VIX. VIX is also something that we covered, and it's interesting because I covered this in our previous market update. I said the fear has not yet subsided. I said that the VIX is almost at 2021 levels, and this is almost exactly identical to where we have traded in the past, right? So unless we come below 20 levels, that's the level that we need to break down below. The volatility on the S&P 500 is very, very important. It's up over 23% on the day, and we are having a really, really significant sell-off. I mean, and this is temporary. You know, if you guys, I would highly encourage you guys to watch that video as well, right, with Daniel Ives. We go over a lot of different things. We go over the rising yields because that's one of the biggest things. Last year, he came on board with CNBC, and he basically mentioned that, you know, the yields were under 1%, and does he see a potential trigger of a sell-off, and what does he believe from a tech growth versus value proposition or a sector rotation. So he shares his opinion on that. I would highly encourage you guys to watch it. It's a really interesting video, about 28-30 minutes long. But on the day, I mean, for everybody joining in, let's see how many people we have right now. We have a little bit over 143 people. Make sure that you drop a like. It really helps out with the channel. So this right here is the current state of the markets. I mean, thank you so much for joining in. I really do appreciate you guys' support. But this is interesting, right? This is mostly, in my strong opinion, it's mostly fear-driven market right now. It's a lot of overreactions, and the rising yields has a big part to do with it. It's probably the only part that to do with it. So let's listen to this.
Thematics that we are pursuing in our second fund.
Yeah, in a way, it's interesting. In a way, it's almost an ESG play as well, right? Because the inclusion that can be achieved in widening digital networks is really in the interest of governments and society, isn't it?
It is, and you know, we talk a lot about the social implications of what we do today at Colony Capital and the privilege that we have to build this infrastructure, and also we have we candidly have a responsibility to the planet. And so today on my earnings call, we announced an initiative, Colony Net Zero 2030. 2 of our companies out of the 19 digital businesses we own, Matt, are already carbon neutral, carbon zero. Many of our companies are purchasing green power, and we've got to build this infrastructure with the thought about the future in mind. So there's social implications, there are environmental implications. We've made big transformations to our governance and our boards, and also the way we're recruiting and the way we're bringing talent into Colony Capital today has totally changed. So this is really a holistic approach to ESG.
A lot of government.
All right, so we'll kind of circle back to that, but this again is going to be the state of the day. Let's go over to and see what the week looks like so far. So this right here is going to be the entire week, and you can still make an argument that we are seeing some type of rotation out of tech over to energy, financials. Christian, thank you so much for the donation. I really appreciate the support. What are your thoughts on yesterday's Green Day? Woke up to this morning and did not expect this. I mean, if you guys did get a chance to watch the daily market update, you know, we covered the VIX, and I think we covered the yields as well. We mentioned that there was a lot of buying pressure taking place. A lot of people saw that as a really good dip buying opportunity, but considering the volatility on the S&P, so that's going to be the VIX, the fear is not yet left the table, right? We're still trading above inside this green rectangle, something that we have discussed, you know, quite extensively on the channel time and time again. You look at pre-pandemic levels, so this right here is, let's go over to the weekly chart. So you look at the pre-pandemic levels, so this right here is a huge spike because of the pandemic, right? So we spiked all the way to highs of what, 84, 85? And this is coming in from February of last year, right? February 18th, like well over 1 year, exactly over 1 year ago. We were trading as low as 15, 16 levels, and a huge spike over that resistance, right? We broke out all the way to 85, 86. This right here is so much consolidation inside this green rectangle. Right now we are seeing another spike potential over 24, 25%. Now over time, this thing should subside. This thing should, this sell-off should be short-lived, as we've already discussed. You know, from a market perspective, from looking at the broader trend, these sell-offs are very short-lived. We need to exhaust the selling pressure. This is something that needs to be absorbed fully before we make our recovery, when the sentiment is near all-time lows, when everyone's just like tired of the selling pressure. That's when we'll see some consolidation sideways, and then potentially a rally back up to new all-time highs. So the S&P down almost 2%, the Nasdaq taking a little bit more of a beating, down over 2.5%, almost 3%. We've got GME, the only stock, along with Twitter, that's in the green. So very, very severe pullback for the markets, and everything is red on the day. So there's really not anything that's in the green. Like, let's look at the ETFs. So ETFs sector. And again, I mean, in my strong opinion, let's look at the cryptos. Where are they trading? So down about 4. Nope, Bitcoin is up just about, trading under $50,000. And this right here is going to be the week for this week. Tesla down over 7%, Amazon down over 4.5%, Apple over 4%, Microsoft almost 4%. February has also been historically a month where we've seen sell-offs, quite aggressive sell-offs. I mean, we saw a very similar one last year, but all we can really do, Disney up over 6% on the week, but how is it doing on the day? Let's take a look. It's down about 2.5%, so trading as low as 192. Pretty scary moment when you're seeing such a red P&L. I agree, Gal. I mean, I honestly haven't even looked at my portfolio all day. I had the interview with Daniel Labs this morning, and then I was just busy doing some other stuff, but I am not even going to open it. You know, well, I guess I'll open it a little bit during towards the market close, to add more to my positions a little bit, to buy maybe Tesla. Where is it trading right now? So Tesla is at 700. Again, incredibly oversold right now, and so is Apple, so is Palantir. Palantir trading below 25 again, kind of trying to stay above 25. That's the support that we had identified in our previous videos. Yeah, I mean, it's just a bloodbath all over. Corsair Gaming, this is, I know it's a pretty big stock. It was down about a little bit over 5% on the day. It's definitely breaking down. But that's the overall market. That's when you find deals. It's like, you know, when the market's selling off and every single stock is red, there's going to be discrepancies, because that's where price arbitrage occurs. That's where you can go out there and be like, hey, this is way too oversold. This is a good deal right now. I need to get into this. Like Enphase, in my opinion, like ENPH, has a lot of potential. It's a growing industry. It's going to do really, really well over the next decade with the new administration. They're profitable. They're growing revenues by double digits. Gross margins are substantially down, substantially up in terms of how much they're making, and the net income margin is also really high. This company is poised to be at least 225, 250, if not more than that, easily. And right now they're trading at 172. ARKG is a big one that's down a lot. Nvidia down back to 538. I mean, this stock is so volatile. It's so volatile. It's unbelievable. Nvidia can absolutely go up, you know, as high as 615. That's the resistance. That's the new all-time high. But in 1 week, it's down over 9.5%. In 1 week. In 1 week. That's not the month. It's one week. This right here was very similar. It was down over 8%. This was in November, first week of November. This right here, in 1 week, it was up 16%. So it's really volatile. The beta is very, very high compared to the overall market. Are you picking up more Palantir? I might. I also have to consider, you know, what percentage of my portfolio is now going to get allocated to Palantir. I have in the growth portfolio, I think I have 50 shares, and then in my main portfolio, I have a little bit, I think, over 200 shares of Palantir. So I think I have a pretty sizable position right now. I easily see Palantir going as high as $45, $50 over the long term. I know that ARK Invest purchased close to over 5 million shares. And this is obviously coming in from an overall market perspective, right? It's just, it's beaten down. $25 is a support that we mentioned. 22 was the next support. So those are going to be two levels that we're watching for Palantir. Let's go over to the daily chart. You guys will notice that, again, 25 was trying to get validated past couple days, but there's just too much rejection. And if you guys remember correctly, you know, even in our Discord, if you're a part of our Discord, by the way, if you want to get access to that, the Patreon link is going to be down in the description below. We have a little bit over 200 members. You'll get access to my TradingView charts. You'll get access to the Discord, and of course my growth portfolio and alerts on every time I buy and sell. what happened this past week after the sell-off is most of the stocks, you'll notice, most of the stocks, and something that we covered extensively for Apple, Tesla so much, we've covered that, they changed the trend, right? They changed the trend, meaning there was a technical shift in the pattern and the price action. And the reason is because up until now, up until like last week, the bulls were in full control. Even if you see companies like Tesla, for example, they're perfectly validating their moving averages, right? So you'll notice that it's been trading above the 21 EMA, so the white line and the yellow line, right? That's the 21 EMA and the 50 EMA. Tesla is validating that bulls are in full control during this uptrend. But what happened this past week, and that's valid for almost all the stocks out there, is that we saw a huge sell-off and we closed below those moving averages, right? That's a technical shift in the pattern. It hasn't happened in a very long time. For Tesla, it didn't happen till December, October, November of last year. So it's been a little bit over 4 months, right? And that's the first time it's happening. So it's a technical shift and it takes time. It takes time for the bulls to regain control because now it's a completely different ballgame. We're seeing downtrending patterns. We're seeing lower highs, lower lows. Look at the 21 EMA. Look at the 50 EMA. They're pointing down, right? As opposed to over here, they were pointing up. It was a strong uptrend. Bulls were in control. So you can almost as is like feel the shift in terms of who's in control right now. And bulls are certainly not in. And even if you look up this right here as a dead cat bounce in a downtrending pattern, we got rejected at the 50 EMA. When you look at Nio, I mentioned the same thing, right? Nio also had a similar pattern as Tesla, had a technical shift. And look at this. So coming in from November 2020, we saw Nio pull back drastically over 31%, but it was still in the bullish context. It was still in the bullish context, meaning that it was still trading above the 21 EMA and the 50 EMA, and it was getting validated at that support. So bulls were still in control despite this correction here. Despite this correction here, we still had a minor breakout validation of that 21 EMA. Now this huge market sell-off, rising yields, is obviously one of the reasons why we're seeing such a significant pullback. And again, a technical shift in the pattern over here for Nio. If you look at Apple, same exact story, right? We in fact broke down Apple very extensively. It also broke down an ascending support coming in from pre-pandemic lows. So that was a pretty significant technical shift. And this right here, another breakdown below the moving averages, and Apple has also been trading above that. So this right here, strong uptrend in the bullish context of things. And now the 21 EMA, the 50 EMA, perfectly aligned together, pointing downwards. So there's a lot of rejection at that level. Bears are in full control right now, and that's why in my previous videos during these severe pullbacks, I didn't ask for the markets to rally or push up higher or go all the way back up to new all-time highs. All we wanted from the markets and from these individual stocks. Let me see if you guys can guess. What did we want from the markets to do remainder of this week or maybe going into next week? Because I personally did not want the markets to rally once again. If you guys have been following up with the channel, it should be a relatively easy question. What was it that we were asking from the markets moving forward? Consolidation sideways. Absolutely right. You guys are so on point. You guys are absolutely right. All we really needed was consolidation and trading sideways to find some type of a base. That's all we need. The reason is because we need to exhaust the selling pressure. And right now, since bears are full control, it's kind of hard to do that. So that's why the support levels are really important. Unfortunately, they will turn into resistance levels because we are breaking down until we consolidate sideways. And once we start consolidating sideways, that's going to be a signal to accumulate more shares. Right now, it's a little bit tricky because you don't really know where the dip is, and it's almost impossible to time that. But it almost kind of feels like you're catching a falling knife and you're throwing money into like a fire pit if you are buying these sell-offs, which is a good thing if you are a long-term investor. So I am buying on these dips at support levels. But I feel a lot more comfortable when we see some type of consolidation because we can almost feel that the selling pressure getting exhausted, right? Just go sideways, pull back slightly. Yep, you're absolutely right. Consolidation, maybe a minor pullback or correction. So yesterday we saw that, 0.5% or maybe 70 basis points, 60 basis points. We can see that. It's okay. But today is absolutely brutal. I mean, I'm surprised we didn't even go into any halts, right? So let's go over to the daily. Let's see where we are with the stream. 520 people. Guys, make sure that you drop the like button. It really helps out with the channel. You guys already know that. So this is the state of the market. And you guys can already tell, I mean, it's not even a rotation into anything. It's just straight up selling, right? Or because earlier we've seen maybe tech sell off a little bit, and a rotation into like energies or banks or financials, or consumer defense. But right now it's just nothing, right? Nothing's green. I mean, Oracle maybe a little bit, 1%. Let's see, what's this? Deere Company. In the industrial sector, we've over here, communication services, we got T-Mobile celebrating their 1% gain. We've got CME Financial up over 1.5%. Twitter, it's got this really small sliver on Twitter. But that's about it. I mean, you know, there's not really much that you can find. Now, if you were to look at the world, I mean, you'll just see like everything's been red on the day. I mean, Alibaba's down almost 3%. We've got JD down over 2.5%. The entire Canadian market, Ireland, the United Kingdom, you know, Switzerland, Brazil, severely red. Taiwan, Japan. I know the Indian market was also red. So it's just a shift because of rising yields, right? That's one of the biggest reasons why we're seeing this is the yields, inflation fears, and today is not even like a rotation. And GME is green, yeah. GME is rallying over 87% to $171. Let's take a look at what's going on over here. So much buying pressure, so much volume kicking in, 101 million shares. Alex, I'm super red on the day, staying strong though. And that's all we can do. I mean, everyone's red. The whole world is red right now. You know, except for people who bought GME only. But other than that, everything is red. And it's kind of hard to judge whether this is because of GME alone. You know, what's the ripple effect of the markets right now? I know that I read a piece where basically what it says, let's try to bring that up. I read an article that went over how GME or the GameStop, you know, there were so many call options, put options, there were so many options contracts on either side of the trade, and there were so many short positions, and there was so much debt that was leveraged on these trades that it could have almost brought the entire the market down, which was a crazy read. Hopefully right now it's not the case because we've changed some of those requirements, right? Shorting, if you're shorting a stock, I read that you need to have at least 150% in collateral, in equity, in order to short the stock, because that way you can cover your position in case things go south. So the threshold for crash is about 30 to 40%. You're right. You're absolutely right. So if you go over to the S&P 500, this right here was the complete technical breakdown in my previous videos, and you'll notice that I identified like three levels. So the first one was the pullback territory, right, which we almost came down earlier this week before bouncing higher. So that right there was going to be the pullback. Yeah, I honestly don't think it's because of GME. I think it's because of the rising yields and the inflation fears that we're seeing in the markets. And this is not even a rotation out. It's more of a rebalancing effect, could be. But again, I also spoke with Daniel Ives. For everybody who's joining new, let me actually bring up that video really quickly. Corey, what's up, man? How you doing? Glad to have you on board. Thank you for joining in, and thanks for the support. 10% correction inbound, it could be. We saw the Nasdaq already pull back 8 to maybe 10%. So this right here is a video that I posted that I would highly encourage you guys to watch. At least check it out. So we had an interview with Daniel Ives, right? So I spoke about the tech versus growth. We talked about the rising yields. We talked about a lot of different things. So definitely, you know, he also goes over the whole ideology behind rising yields and how long that could persist in terms of selling. And he's been covering tech stocks for over decades, right? I mean, he's been in the industry for so long, so definitely worth watching and getting his perspective and opinion on the markets. So Corey, yeah, I mean, for the S&P, this right here is going to be the pullback territory that I mentioned. That's going to result in maybe a 4.5%, maybe 5% drop. But a more likely scenario and something that can really help the markets over the long term. Now, of course, in the short term, it's absolutely sucks and it's very unfortunate for the markets to pull back. But this right here is going to be more of a correction territory, right? If it comes down to 3,500, that's the level that we had identified, kind of like this correction territory for the markets. Now, a bear market is going to look like here, close to, let's say, 3,000 points. It's going to be a drop of 22% from all-time highs. So if you were to kind of extend this, you'll notice 24, 25%. In my opinion, this is a very less likely scenario. So if I were to put this over here, you know, for the S&P, this is going to be less likely. Now, can we see a correction? What do you guys think? I want to know from you guys. What do you guys think about the S&P 500? Are we going to come down to the pullback territory, correction, or bear market during this sell-off? %15 correction, definitely a correction. Hurts, but a correction would be healthy long term. Correction is good, correction. So yeah, I mean, correction is likely with the rising yields, and there's fears about inflation. So that's something to consider as well. So correction, in my opinion, yes, also, because for everybody who's new to the channel, I'm also going to break down really quickly that we also went over in the past in one of my previous live streams, is this right here. I believe this is the game. Nope. Oh, there it is. So this is something that we went over, and the probabilities is really low for the markets, for the S&P in general, to pull back down to 33,000 levels and drop over 25%. And the reason is because in over 70 years worth of data, if you were to look at this, and this is something we've broken down in my previous videos as well, there's only been 17% of the times when the S&P was 25% or more away from all-time highs. So this right here is the chart of the S&P 500 dating back 1950s, and if you were to kind of uncheck all these, you'll notice only 17% of the times the markets have been more than 20% away, not even 25, more than 20% away from all-time highs. Only 17% off of 17,000 trading days over the last 70 years, now almost 71 years. So that really goes to show a lot about the probabilities. Now, when you take into account within 20%, there's been 19% of the times. Even then, the probability is really low, right? Within 20% of all-time highs, right? Even then, the probability is really low for the markets to pull back 20%. When you do 10%, 16% probability, within 5% and within 1%, when you account for these three top categories, then it's 69% chance, right? That's a pretty high likelihood for us to see a 10% pullback or 10% drop. Linus, thank you so much for the donation. I really support you. I really appreciate you, so thank you so much. So that's kind of like where the market sentiment has been from all-time highs, right? 69%, very likelihood scenario that we do see a pullback to that correction territory, maybe a 10% pullback or a correction. And then talking about the Nasdaq, you know, the Nasdaq's already suffered quite a bit from all-time highs. I mean, 14,000 we had mentioned, also aligned with this higher high, aligned with this horizontal support resistance, and we are down a little bit over 7.5%, almost 8%. So And this right here again is a technical shift for the pattern. Right now it's a very, very critical. Today is actually going to be very critical for the Nasdaq. And actually I didn't even notice this. So it's very important for the Nasdaq to either close above 13,262. Right now it looks like we're not going to do that. If we do close below this 50 EMA, then there's really some cause for concern for the markets, at least in the short term. At least in the short term. Because then again, it's going to shift the pattern, right? It's gonna be a technical shift. We're going to break down below 21 EMA, which we have already done in the past. Actually, we validated the 21 EMA perfectly. We broke it down. We validated the 50 EMA, so that's going to be the yellow line. We pushed up, back tested that old support as a new resistance, so that 21 EMA now acting as a resistance, and now we are potentially down even further. So this right here is a breakdown, back test of that old resistance, and then now we're selling off even further. So for the Nasdaq, I'm a little bit more concerned for the Nasdaq than I am for the S&P, because S&P, if other sectors again continue to pick back up, receive a more rotation, then it'll stall or consolidate. But if tech continues to sell off along with healthcare, then we're going to see a much severe correction for the Nasdaq. I mean, for the Nasdaq it could be a little bit more than 10%. For the S&P, I see it going as far as 10%. For the Nasdaq, it could be a little bit more. So 12,600 would be the second support level. Right now we're still validating that 13,200, which is somewhat aligned with that 50 EMA previous resistance. So we'll see if we close above. We'll probably close above 13,200, but we'll still close below the 50 EMA. So it's going to be very interesting where the markets close tomorrow. Or where we gap down or gap up tomorrow. Nasdaq to 12K in my opinion. So 12K would put us down another 9.5, almost 10%. So from all-time highs, we would be down a little bit over 15%. That's not uncommon. That I could see that. So this is also something that we broke down from our Nasdaq analysis in my previous videos. Is this? So you'll notice that Nasdaq has these, it's a very clockwork pattern. So you'll notice that we trade inside this uptrending channel, right? So we are making higher highs, so that's going to be this, and the higher lows, that's going to be this, right? So we're trading inside this uptrending channel. We go into this area of consolidation, so we start trading sideways. We resume our rally, so this right here is resumption of that uptrending channel, and then a more severe pullback from all-time highs. This right here was also during the trade wars with China, 22% drop from all-time highs. So again, we continue on this rally, we push up, make higher highs, higher lows, start trading sideways, consolidate, again, similar to what we did over here. So you'll notice this rectangle and this is very similar. We continue our rally, so we resume our uptrending channel, we push higher, the global pandemic hit, and we dropped close to 32%. Now this time around, you'll notice a very similar pattern once again. We push up, higher highs, higher lows inside that uptrending channel, consolidate for a little bit, and we are pushing higher once again. So we resume that rally, and this is what concerns me right now for the Nasdaq. Now it's not to say that we're going to see a very severe correction similar to what we saw in the past, because you could make an argument that the pandemic kind of blindsided everyone, and it really wasn't something that anybody had priced in. But right now, what's the biggest fear that everybody has on the markets? What do you guys think? What do you guys think is the biggest fear on the markets right now? Is it valuations? Is it potential tax hikes, tax increases? Is it potential, the yield rising? Is it inflation? What do you guys think? What do you guys think is a potential risk to the markets right now? What's the biggest fear? And I'm talking from a fundamental standpoint, from a macroeconomic standpoint. Inflation, valuation, 10-year yield, GameStop, inflation, getting absolutely violated by Amazon. Let's take a look at Amazon. Corporate taxes, people just overreacting. Bubble bursting, yields rising. So yeah, yields and valuation are two big things, right? And once we reset, once we kind of recalibrate where the yields are, and bring valuations down to more logical bases, then what do you see happening, right? We could see some more consolidation sideways, and then our bull rally kind of extends. I mean, right now, ARK ETFs are absolutely taking a hit, right? ARK ETFs are absolutely just down so much because, I mean, and these are ETFs. These are exchange traded funds. They're designed to be more diversified. But since they're in this disruptive growth phase, they're down just as much as Tesla or some other stocks, right? I mean, you think of these as like some indices, right? That they would be down. If indices are down 2%, the ETFs should be down 2%, but no, they're down twice as much. In some cases, even 3 times as much as the broader markets, right? So ARKK, ARKQ, I mean, down over 5%, 5.2%, almost 4%. So, you know, the real pressure and the real test of the market is on ARK Invest and Cathie Wood, because they've seen severe cash outflows from the markets, right? This has been, Amrit, thank you so much for the donation. I really appreciate that. Thank you so much for the support. So they've seen significant outflows, right? 450 million outflows from ARK Invest over the last couple of days from this past week's sell-off. That's the real test. And again, it's a story of growth and value. What are we going to see in the future? Are we going to see growth again outperform value, or are we going to see some type of rotation and this stagflation in the future where we see a lot of consolidation sideways? We just see markets kind of going sideways. Like, think about this. Like, this is a very simple example on yeah, this is a perfect example. I want to go over this. So we're going to break down one company that reported earnings today. All right, can you guys guess which company that is? That's a company that's been down so much from all-time highs. It's down over 40%, and they reported their earnings, and they're still down today. And their earnings, I kid you not, when I read the earnings, it was by far one of the best earnings. But let me know what you guys think of that company is. Fong, you Harshit and Fong, you're on point. It was Li Auto. It's down over 10%. This company has been down over 40% from all-time highs. Like, this right here is a drop of 46%. And when I read the earnings this morning, let's go over. So so they actually reported a profit. Like, this was, so analysts expected a loss of 4 cents, and they actually came in with a profit of 2 cents per share. Like, we actually broke down the earnings in one of my previous videos, and I wasn't even expecting a profitable quarter, but yet they reported a profitable quarter. They have one of the best margins out of the 3 EV makers, Nio, XPeng, and Li Auto. Li Auto has substantially higher margins, and revenue jumped 39%. Like, they did over $500 million in revenue, $635 million. Li Auto only has one vehicle right now, so you'll notice that Li Auto reported earlier that deliveries reached 14,464 vehicles in the fourth quarter, 67% jump in Q3. Deliveries total 8,660 units. Outlook. Let's look at the outlook. Li Auto sees Q1 revenues 450 to 493 million, up 246 versus 279% versus a year earlier. It expects Q1 deliveries between 10,500 11,500 vehicles. This is despite a global shortage of semiconductors. This is despite everything that's going on, like, in the world right now. They're still seeing such massive Q1 forecasts and a jump of 200%. So, you know, in my strong opinion, this was massive overreaction from the markets. Like, Nio down over 8%. They're reporting March 1st. We've broken down the earnings. You know, if Li Auto surprised us by a profitable quarter, I mean, I could just see Nio surpassing $1 billion in revenue in Q4. You know, my estimate is just shy of $1 billion in total revenue. I could just see them basically surpassing $1 billion, surprising us with. It also depends on the average selling price, so the ASPs, because they also already exceeded in the deliveries over 17,000 vehicles. But just incredible market momentum right now. Everything. Like, GameStop is pulling back a little bit, down about 30% from all-time highs, now up only 60%. But Apple down over 2.5%, Facebook down 3%, Square continuing on this sell-off. So let's go over to Finviz again. So let's see how many people we have. 855. Again, thank you so much, guys, for joining in. Make sure that you drop a like. Let's see if we can get to at least 400 likes on this live stream. I'm doing this, it's pretty late. It's already midnight over here. So if you guys don't mind smashing the like button, it really helps out with the channel. So yeah, I mean, pretty red all around. Let's take a look at Bloomberg. Do they have anything going on? So if you were to look at some recovery stocks, you know, Disney is down, Southwest, Walgreens, Bank of America, Walmart, Caterpillar, 3M is up a little bit, and Waste Management is up a little bit, slightly in the green. But everything else is just so these are the stocks that are actually doing well. So COS, GME, CDXC, ACY, I'm not sure what that is. Domino's Pizza is down over 7%. That's a pretty... They didn't even report earnings today, did they? How come they're down so much? That's a pretty overreaction of a sell-off. So they did report. So adjusted earnings for the quarter came in at $3.46 per share, up from $3.13 the same period, but shy of $3.90 consensus analyst. Revenue grew to $1.36 billion from $1.15 billion, expecting $1.3 billion. Jesus, I mean, if you miss earnings by a little bit in this market is gonna punish you like it's nothing. Like over 7%. Absolutely crazy. Palantir under $25 is a buy for myself. Nio under $50 is a buy for myself. Tesla under $700 is a buy for myself. Apple under $125, I want to say, is a buy for myself. Amazon, anything close to $3,000 is a buy for myself. And I can actually go over some price targets and support levels. But again, you guys have to remember that this is not financial investment advice anyway. I mean, this is just for entertainment purposes. And I'm just sharing my analysis. You guys know that. All right, so Twitter. Twitter was a little overextended to begin with, because you know we were covering this on our daily market updates after the earnings. The RSI, the MACD, incredibly overbought. So, and it actually broke out. It gapped up and broke out over 74. If you have to keep and buy only one stock, what would it be right now? That's actually a great question, and it would have to be Tesla, because I do have a lot of conviction in Tesla over the long term. I'm really interested to find out, you know, how their autonomous driving and AI plays out. In fact, we even talked about Tesla with my interview from today with Daniel Ives. So again, feel free to watch that. He covers his perspective on what he sees for Tesla over the next, you know, 12 to 16 months, the valuation, the price targets he has, the base case price target, and the bull case price target on Tesla that he has. And we also talked about Apple and EVs, right? So Apple is working on EVs. So we covered that Project Titan that started in 2014. So we covered that as well. So that's some interesting information as well. We are entertained. Great. So Twitter, $60 are going to be the two support levels. QuantumScape, you guys will notice, is not down as severe as some of the other stocks because it's already been down. It's been beaten down so much. Like from highs of 132, it was down a little bit over 70, almost 70%. Do you think short-term Tesla would pull back to 650? It's very likely. It's very likely. I mean, the support that we were watching today for Tesla and Nio, if you guys did get a chance to watch my video from yesterday, I mentioned that all Nio needs to do today is close above $50. That's it. Close above 50. That's all I want from Nio stock. So if you go over to Nio, you go to the 30-minute time frame, you'll notice, let's see. Let me see if I can bring up my 30-minute chart. So markets opened. So Nio has just been selling off, right? As soon as the markets opened. But $50 is going to be this level, roughly, when the markets opened. So we were kind of like hovering right around that level. So you'll notice $50, 50 cents, right around that level. We were kind of hovering. So this is 1 minute candles. So let's go over to the 5-minute chart. So actually 1 minute was much better, much clearer. So yeah, you'll notice a lot of consolidation sideways, and then we broke down. And once we broke down, we came back up to back test that old support as a new resistance now. So now we're just struggling to break out over 50, and then it was just downhill after that, right? We've just been selling off. So all Nio needed to do was validate this 50 here as soon as the market opened, but this failed, so the whole pattern failed. For Tesla, that right there was going to be 700. So 728 here, but more like, I want to say 700 because I had that on my other chart. So let me just go over to this one. So $695, $700 was the level that it just needed to validate. And right now we're just hovering over that level. So if Tesla can close above 695 or 700 levels, then we still have some potential trend reversal for Tesla, because we are still trading, or we were trading inside this downtrending channel, but we are getting rejected from these moving averages, right? If Nio doesn't close below 50, then there's potential more downside for Nio onto our next support, which is, I believe, $43. But they also have the earnings coming up. So you also have to remember, well, again, you can make the argument because Li Auto just took a huge beating despite reporting great earnings, and they're still down so much. And they have been down quite a bit. So $43 is going to be the next level to watch for Nio. That's going to be this level right here. And we're just getting rejected from those moving averages. We've got a lot of resistance levels. I mean, so earlier back in November, December, if you were following a lot of my analyses, you guys will remember that all these levels, a lot of the levels on a lot of the stocks that we analyzed turned green, meaning that they were acting as support levels. Bulls were in full control. Now, all these levels are in red, meaning that there's a lot of resistance ahead of us. There's a lot of supply here. There's a lot of bearish sitting at these levels. And in order for us to regain control, we need to first find consolidation. First, we need to find a base, because even if you look at how this started, it wasn't like a huge sell-off down. It was more consolidation, more stalling, more making lower highs and lower lows, and then a sudden drop all the way down. Same thing that happened with Tesla. Is there even a strong bear argument to make for the market overall? That's a great question. And in my opinion, there's some headwinds for the markets that we know of. We know of the potential tax increases that may or could happen. We know that interest rates are going up. The yields has been rising. We know that inflation is going to creep up in the future. It's probably going to be 2%. That's where the Fed wants it to be. But other than that, I mean, we know that the markets were a little bit frothy, and they were getting on to a point where there was everything a little bit overvalued. So this could also be as a result of, wow, AMD is down over 4%. I covered AMD as well in our daily market update, so you guys can watch that. But yeah, I mean, this is a great comment. The most important thing is that your health is more important than money, and go outside, get some fresh air, take a break and relax. That is so important, and I would highly encourage you guys. I mean, I started meditating and doing mindfulness. That really helps to stay calm during these times, right? I mean, AMD is down over 4%. I have a pretty big position in it, and Tesla is down, Nvidia is down, Nio. I've got pretty big positions in all of them, so I'm probably down like 5K today alone, and I was down 5K on Tuesday, so it's a pretty red day to have, and it really sucks to look at your portfolio. But at the end of the day, I mean, you have to understand why this is happening, and is this a strong buying opportunity to get these deals on a discount, or if this is time to cut your losses if you're not long term on these companies. For me, these are high conviction plays. They've got the fundamentals and the valuations. Ishak, thank you so much for the support. I'll cover CCIV right after this. So again, it's more of a high conviction play and your confidence on these stocks, right? I'm very confident on AMD. I'm very confident on Tesla. Very confident on Apple, Amazon. Very confident on Palantir. Very confident on Nvidia. Very confident on Square. So this is a little bit of an overreaction, but who's going to drive the change in the next 10 years? If it's not going to be these growth companies, who's going to lead in innovation and tech and fintech? And these companies have the fundamentals to do it. They've got the cash to do it. They've got the valuations to do it. It's just the market is recalibrating right now simply to bring us down a little bit before getting growth priced in again in the future. Again, that's just my 2 cents. I could be completely wrong about these companies. You know, who knows? 2 years from now, these companies are nowhere to be found. But I have a strong conviction in all these companies over the long term. For CCIV, you know, we're testing the 50 EMA. We're getting rejected by the 21. Huge gap here. I know the valuation came in much higher than expected, but now we are consolidating a lot, right? At close to $25, $26 per share. So that right there would be the level to watch as a support. So right there, previous resistance, we kind of got rejected here. So you'll notice that rejection here, we pushed up, we came back down to back test that old resistance as a support before rallying even higher. So right now we are again consolidating right inside that $25, $26 level. The RSI really oversold, consolidating sideways, and that's exactly what we need. That's what I was talking about when the selling pressure is coming in hot. We need to consolidate, move sideways a little bit, right? We need to find a base so that the RSI can also consolidate, the MACD can also consolidate. Then we can see some bullish momentum for the stock. So I could easily see CCIV maybe retesting highs of $39, $40 if you do see some more buying pressure take place, because that's where the next resistance is going to be based on these two moving averages, right? So the RSI at 32, again, we need to see a bullish crossover, and for the RSI to also start trending higher for CCIV to see some more upside in the future. So let's take a look at how many people we have. So 825. Again, thank you so much, you guys, for joining. Let's see if we can get over 400 likes. It really helps out.
Democratize these things that are changing the world. The more we activate people to being.
So this is the state of the market, you guys, for everybody joining in. Thank you so much. We covered a lot of fundamental and technical analysis on the markets. Today, again, is a pretty red day. It's not even a rotation into anything else. You'll notice tech is taking the majority of the hit. Amazon down over 2.5, Google down over 3, Facebook down over 3, Apple down over 2.5, Microsoft almost 2, Tesla down over 5.5, almost 6%. Semiconductors down heavily, Nvidia down almost 8%, Intel over 4, AMD is down almost 5%. Then we've got software, IT, consumer defensive, energy, financials, healthcare, materials, mining, utilities, you name it. Everything is just straight up down. It's just crazy. So, all right, I'm going to cover a few more stocks for you guys really quickly because there's not really much to go over other than the fact that the markets are just down and U.S. 10-year yields are rising again, up over 7%, something that we had discussed in our yesterday's live stream. Exactly. Yeah, you're absolutely right. We've covered Nio. We've covered Apple. And we've covered Tesla. We've covered Palantir. Palantir, let me go over really quickly. getting rejected, you know, by that 21 EMA. So 25, actually, what? Look at this. Look at this candle on the 4 hours. It's like a huge inverted hammer candle. But again, the pattern is just so much on the bearish side. Ro, thank you so much for that. I really do appreciate that. Thank you. So $25 is now going to start acting as a resistance for Palantir because we broke down below that level, right? It's previously acted as a really strong support. You'll notice that we bounced off of that level here. We bounced off of that level here. If you go back, a lot of consolidation above $25. So if we don't close above 25, then that is going to be the potential resistance. And the next support is going to be 22.50 for Palantir. But the trend is just so down. It's just, I'm going to be very interested to find out what exactly does ARK Invest do today. Are they buying Palantir and Tesla? Because they have to keep a certain weighting for Tesla and Palantir and some of those other stocks. So let's take a look at after, because I know that they bought a lot. They bought a lot of Tesla, and I think close to 240,000 shares. So I want to see where that weighting is, because if it's over 10%, and if they keep buying at these levels, they have to pretty much buy everything else to keep that weighting intact. Because if they're buying only Tesla on these red days and they don't buy anything else, their weighting is going to go up and up and up. And then again, it becomes more risky holding for ARK Invest. So let's take a look at this ARKK. Yep. So let's take a look at their fund holdings. So there you go. So we got Tesla, #1 holding, and this is as of yesterday, so February 24th. And after the huge purchase, you'll notice 10.41%. The last time we broke down was 9.7%. So they went up by what, 70 basis points? So again, I'm going to be very interested on how much conviction they have on Tesla, and are they buying at these levels? Because like I said, if they buy more, they almost need to buy more of all these stocks, because otherwise you're having a very different risk profile than the prospectus that you issue, right? The weightings that you have, the different percentages, because if it goes up to 11%, 12%, and all these other stocks stay the same, Tesla is going to influence more and more and more of the ETF. So let's take a look at the robotics one. It's probably going to be a very similar case, I feel like. Yep, so now Tesla makes up about 10.5% after the purchases. Earlier, I think this one was much lower. I think this was 9.5%. So I think they bought more into this fund. So about 1% increase in this one versus about 70 basis point increase. But both of them are now well over 10%. And their next holding is almost half, 5%. It's going to be Baidu. And this right here is just about 6%, which is Roku. Square is still up there. So again, very, very interested to find out. What do you guys think? Are they buying today? ARK Invest, they're going to publish their trades after the markets close, but what do you guys think? What do you guys think out of all these companies are they buying today? Do you think they're buying Tesla, Roku, Square, Teladoc? My God, did I lose you guys again? Oh, there it is. I thought you guys were commenting on the live stream. I thought it ended it by itself, but yep, long term will work, long run will work again. So let's take a look at where Palantir is on this list. I don't think it's on their main fund, right? It is, okay. So Palantir now makes up about 0.5% of their holdings. So right here. Yes, I'll be slowly nibbling in on these red days. Again, I do want to see some consolidation sideways, because right now I just feel like there's more selling that could happen for Tesla, and I wouldn't be surprised if we do see it down $650 per share. I mean, yesterday or a couple days ago, we saw as low as 619. So that was a pretty brutal sell-off. Jerome Powell speaks. For the last couple of days, the markets shoot up once again. But the yields, that's the biggest thing. There's the yields, inflation. So Bitcoin just also turned red, down about 40 basis points, down to 49,455. Alireza, they are holding Palantir. They have about 0.5% in their main ARKK fund. Workhorse is down a lot, but it's up. It's outperforming the markets, you guys. It's up over 3%. But I think now Workhorse has reached some type of a fair value, in my opinion, because this right here. Let's go over to my other chart. Backwoods, thank you so much for the support. I really appreciate that. Mostly tech, and I'm gonna actually put out a separate video over the weekend going over some recovery plays as well. But mostly tech, like Tesla, Nio is gonna be one of them. Palantir, AMD, Amazon, Apple. Yeah, those are gonna be most of it. All right. So what were we looking at? Workhorse. So a lot of it, I think, in my opinion, was pricing in the USPS contract for Workhorse. So we saw like this entire move, I would say, from like $22 all the way to highs of 42 was pricing in somewhat of the Workhorse contract. And now I feel like it's more of a fair value for Workhorse. I think it's appropriately valued in the markets. It does have a lot of potential to the upside if they can scale those revenues and they can win more contracts with other people. So definitely, I mean, it can make its way back up to $42, but it's going to take some time. Rita, I couldn't agree with you more. You know, at times like these, you know, I have the same feeling. I'm like, I just want to get it over with. So might as well just sell off all the way down to 600, 500, just get it over with, and then we can start consolidating. You're also right. It needs time. It needs time to consolidate, and everybody needs to be patient. It's gonna take some time till we see some sideways trading, and then potentially make our way back up as well. XPeng. Let's take a look at XPeng. So XPeng is also down 7%. I mean, very similar to what we have seen for Li Auto, Nio. But XPeng is also down so much from its all-time highs, right? It's similar to what we've seen for Li Auto. It's down like 50%, I believe, 54%. So pretty significant sell-off for XPeng as well. So I think I have some more analysis on this. If the market likes this, continues, the recession will be coming. Kevin, thank you for the comment. I do somewhat disagree because, you know, recession would also have to do with a lot with unemployment and labor market, which actually on the surface level the markets are dropping, but underneath the labor market is improving, right? The goal is to get the U.S. To full employment, at least get the unemployment rate below 4%, and improve the labor market. So I think if more people are employed, you know, we're probably going to see rotation out of tech that can lead to a further sell-off in the markets. It's almost as if it was completely opposite of everything, right? The underlying economy, when we had jobs, people losing jobs, and unemployment rate shot up to 16-17%, tech companies basically, even though as unfortunate as it is, they benefited from this pandemic, right? Earnings accelerated, valuations accelerated, and now once we're seeing economy getting better, we're seeing a rotation out of tech, which are dragging the averages lower once again. So this is a correction before the symbol is buy. I completely agree. Thank you so much for the donation. Really appreciate that. But the biggest piece of the puzzle is big tech. And that's why we concentrate on tech so much on the channel, is because they control the averages, right? They control the averages. They have so much influence on the averages. So look at this, right? We've covered the pie, like we've covered the squares. If you were to look at how big Amazon is relative to the other squares, I mean, it's almost as if like 2 to 3 times as big as, or I should say like 4 times as big as Disney or Netflix, right here on the side. And then when you cover Apple, I mean, Apple can almost make up this entire software, information, and this sector right here, right? So it's a pretty big influence on the broader markets. If you look at Microsoft, I mean, you can just make an argument. Microsoft is just as big as these semiconductors over here, all put together, right? So if these companies fall, and they fall drastically, they're gonna bring the averages down. And when the averages come down, we're talking the S&P, the Nasdaq, you're talking 95 to 98% of pension funds, retirement accounts, hedge funds, portfolios, index funds, ETFs, like it's everything. So we've become so concentrated because of the market cap weightings. That's why Dow is just like on a whole different level with the price cap weighted. Even if Apple falls, it doesn't matter, because if Boeing does well, Dow will still go up, right? Even though Boeing is so small relative to Apple's market cap. So that's why we need to understand. We really need to understand where tech is going, right? Where tech is going in the future. If you have a really good understanding of where tech goes, you have a really good understanding on the averages. And then you can tie that in with a lot of different things, right? With leverage ETFs, inverse ETFs, you can kind of understand where everything else will get tied into the picture. Now with the yields rising, tech is falling because of the valuations, because they're trading at a bit of a stretched multiples. And if tech drops, average indices drop, right? So that's having a ripple effect on the markets as well. But for XPeng, keep a close eye at $30. That's the next support here. 37.45 is going to be the next resistance. Previous support we broke down. Still, the pattern is incredibly bearish, making lower highs, lower lows. The RSI, MACD, again, very, very oversold right now. So keep a close eye at $30. 37.50 is going to be the next resistance. ARK buys Tesla every day. These days, I receive their trading per mail. Interesting. Yeah, I mean, they've been buying on red days for the past few days, but their conviction on Tesla is also really high. So that's really interesting to know. And they're gonna put out a research on Tesla's autonomous driving as well. So I'm gonna be very, very excited to find out how well they do. Let's take a look at Snowflake. Snowflake down about 3.5%. This has also been a stock that's been so volatile. So all-time high is 427, 425. This right here would be the support I would watch personally at close to 264, 265. I mean, we're trading exactly at somewhat of a resistance for Snowflake. So previous support, old resistance here. And then if you look at support at close to 240 for Snowflake. We almost came down to as low as 250, 242 on this Tuesday's sell-off. So that right there would be the next support level to watch for Snowflake at 240. And then the next resistance it needs to break out of, at least today, is going to be 264. We're trading exactly. We're literally at 264. So if it closes above that level, then maybe it has a potential to kind of break out of those moving averages. Considering the RSI, the MACD, incredibly oversold, and we are down so much from all-time highs. Sean, what's up, man? How you doing? Glad to have you on board here. I'm probably gonna do the live stream for maybe another 10 minutes, cause again it's almost 1 a.m. here, and then I'll have to wake up and do the market update for everyone. So I'll do that as well. But crazy day in the markets, absolutely insane volatility, and again, give you guys an update on broader markets. Cedric, thank you so much for the donation and the support. Really appreciate that. Let me see what your question is. My friend Daryl is a huge fan of yours. Thank you. Glad. Say hi to Daryl. Hi to you and hi to Daryl as well. Thank you so much for the support. So yeah, and actually this is a great case study as well, because you know, our growth account, unfortunately I started my growth account in February of this month, and this month has been as red as it gets, right? So we're down. I mean, I'm personally down on my growth account quite a bit, right? I've got AMD, Palantir, and Tesla as 3 of my biggest holdings in that growth account. Now, high conviction picks for my personally, I mean, I believe that they have a lot of potential in the future once everything settles down. Palantir, easily see a $45, $50 per share target on it. AMD, easily over 120, and Tesla, at least up to $1,000 price target for myself. So those are 3 high conviction plays that I have, but I'm down so much. So that can be a perfect case study as to, you know, what we can do over the process of during a sell-off, during a correction, and I'm going to be consistently adding more money and buying on those dips. So we'll see where we end up over the long term, right? Where we end up over the next 8 to 12 months for those 3 stocks. So that's going to be very, very interesting if you guys want access to that. And of course, you'll get access to our TradingView charts, which automatically sync over to your charts as well. Jeremy, thank you so much for that. Really appreciate you. So if you guys do want access to the Discord, if you guys want access to the TradingView charts, the growth portfolio as well, the Patreon link is going to be down in the description below, and you're more than welcome to join. We have a little bit over 220 members now. Derek, can see your growth account being plus 20% in May. Yeah, I mean, that's the goal, is like, you know, having a little bit of diversification, but also concentration, a little bit that you're picking the right high conviction stocks that you believe have a lot of potential in the future, right? AMD is a big one for me. In the short term, they are going to suffer with this global shortage, but I still believe they're going to do really well, because, I mean, Nvidia just reported their earnings. They did 16 billion in revenues, and AMD is guiding us for 13 billion in revenues in this year. So there's not really much of a difference when it comes down to the top line revenues between advanced micro devices and Nvidia, right? 13 billion for AMD, and I even think they're going to beat their expectations. They're going to go up as high as 14, 15 billion. Nvidia did 16 billion, and yet Nvidia is trading at $300 billion, 320 billion. AMD is trading at just under 100 billion, maybe 100 billion market cap. So I, over the long term, easily see AMD like kind of catching up as they gain more market share from Intel, and maybe even 2xing from here. Rahul, we covered Bionano Genomics, so we covered BNGO. If you just search my name and BNGO, you should be able to see some updates. So Bionano Genomics, I know that Sapphire has been doing really well at getting adopted with more and more hospitals and healthcare places in the US. Down about 6% today, but this right here are 2 support levels to watch, right? So actually Tuesday we validated $691, $8. We pushed up, got rejected at this 21 EMA. So again, this right here is a trend reversal, right? What is happening with BNGO right now that you guys can identify, right? What shifted? What was the technical shift here for BNGO? Let me see if you guys can tell us in the live stream. So BNGO, you know, traded all the way as high as $15, $16 per share. Absolutely incredible rally of over 1,600%. And now, what do you guys can guess, or what do you guys think is happening with BNGO right now? Similar to what it's happening with Tesla, similar to what we're seeing with Nio. Jonathan, you're absolutely right. You're on point. Broke down, right? Broke down below this moving averages. So Rita, you can join after March 1st. I don't know why they do that, and I know that a lot of people have been asking me about that. That if they join today, they charge again on March 1st, which is quite which is a little bit crazy to think, but you can just join after March 1st. You're not going to miss out on much, right? And I'll at least try to do one stock analysis from a technical standpoint for everyone each month. It does get a little overwhelming when I have like 60 plus requests, but I do them over the weekend. I'll send them like via email to each and every one of you guys personally, going over like the screenshots of the stock that you want me to analyze. I'll create that post where you'll be able to comment your ticker, and I'll go over that, and I'll email you over those analysis for that month for one stock. I had that as an introductory offer. I'll see how many I get to. If it's like over 100 or 200 requests, then obviously it's not doable. So then maybe I'll do like a community post of like 20 stocks. I'll have everybody vote on them, and I'll do like 10 or 20 of the ones that you guys vote. I'll do something of the kind. But the point is for me to do these analyses for you guys and basically do a complete technical analysis on as many stocks as I can for you guys, so we can learn together, grow together. Again, I'm still making mistakes every day, so the whole point is for us to learn from each other. So the next support for BNGO, let me see if I have the analysis here. Yep. So the next support for BNG is going to be somewhat sitting at close to $9.94, at close to $10 per share. Previous resistance right here, all support. Previous resistance we broke out, back tested support, pushed up, somewhat validated this support, and right now we are hovering over $9.90 or $10 per share. So that's going to be the next level to watch for BNGO. But similar to some of the other stocks, it needs consolidation, and it needs a breakout over this. It needs a breakout over 1150. So that's going to be this resistance right here. So again, that's going to be two moving averages. Earlier, you'll notice that we were perfectly validating that support here, 21 EMA. 21 EMA, 21 EMA, we broke it down, validated the 50 EMA, perfect validation of the 50 EMA, but then we broke it down, and right now we are getting rejected from that moving averages, right? So again, technical shift of these patterns across the board for the S&P, for the Nasdaq, for Tesla, Amazon, Apple, Nio, Microsoft, Nvidia, AMD, you've got CCIV, you've got BNGO. A lot of the stocks, again, technical shift, and what needs to happen is some consolidation sideways, and then we can potentially break out of those moving averages. Let's go over to Switchback Energy, ticker symbol SBE. Switchback Energy is also one of the stocks to be analyzed. Jesus, is this right? Were they trading as low as $26 per share the other day? No way that's right. Wow. Wow. Wow, this is something else. From $34.90, they dropped 23%, all the way to $26, only to then get bought up back over 28%. I think the same thing happened with like Bitcoin. I saw that. Or Ethereum. I think Ethereum fell below like 900 or something, and then it got bought up immediately. Let's see if I can pull that chart up. Yeah, it should be over here. Yeah, it was, I think this. The low for this candle, 700. Like, look at this candle. Let's see if we can go over to the 30-minute time frame. Oh, let's go over to the 5-minute. So you'll notice a straight line, and this right here. Look at this. And some people were putting like the Tesla logo here because it kind of looks like the Tesla logo. But what a drop. Like, and look at the volume. It's just crazy. 5-minute volume, 13,600 Ethereum coins traded. It was down 39%, all the way as low as like what, $817. The following candle, $700 low, 3,000, and then the fall, like we move back up. Crazy. So much volatility. This is insane. All right. So Switchback Energy, let's go over to the 4-hour chart. So 34.50 is going to be the resistance. I mean, right now we are kind of hovering right around that level. Previous support, previous support. Yeah. Live free, yes, it is up almost at 1.5%, up over 8% on the day. So that's what's dragging the S&P and the Nasdaq lower. Let's see if you have anything on Bloomberg. But for quickly for Switchback Energy Corp, ChargePoint, strong company fundamentally speaking. I love their business model, hardware, services, software, good presence in Europe and the United States. Still getting kind of rejected at those moving averages, so that's going to be very critical for a lot of the stocks out there for them to break out over $36, $37 per share. But the support level to watch for Switchback is going to be somewhat at 32. So 32.87, 32.90 kind of validated here, validated here. If you move forward, kind of validated here. So we are kind of struggling in between this range. So 35.65 is going to be the resistance. And we got a support right around this level at close to $33. So let's take a look at anything that we have going on Bloomberg. Oh, they're talking about big tech. That should be nice. Jose, Palantir recovered. So if you want to go back on the live stream, just watch that
what really excites
segment.
me about arts and technology is...
And then you can jump back over to the live stream. Bryce, let's take a look at Square. I just want to see if they have anything interesting going on here.
The actual level of yield. So the relationship between the growth component of higher yields and the inflation component of higher yields. You know, we are likely to see a breakout on the upside in some inflation measures, but I think it'll be more a function of base effects relative to last year and price shocks driven by supply-demand imbalances. We don't think we have anything resembling the kind of systemic inflation problem of the mid-70s into early 80s, so we could have sort of a short-lived spike in inflation. But I think the re-rating that's happening with multiples is a function of typically in the second year, that's what happens. You see that multiple expansion in year one coming out of a recession because you don't have the benefit of the E, but you have prices going up in anticipation. Then the E has to start to kick in and do a little bit more of the heavy lifting. So this re-rating of quite elevated multiples should have been expected even in advance of this latest spike in yields. And I do think that earnings are going to have to do more of the heavy lifting. I think that pure multiple expansion story was last year's story, not this year's story.
Lizanne, are you a dip buyer here? Are we going to see what we saw on Tuesday?
So I think it really depends on the investor. I don't like any time I hear somebody sort of make a blanket recommendation, okay, time to buy here. Who's the investor you're talking about? Is it somebody that has a nest egg and needs to live on the income and can't afford to lose any of it? That's a very different sort of message than I would give maybe a young investor who's a risk taker and, isn't going to obsess over drops in the portfolio. I think portfolio-based rebalancing, I think, is the strategy that makes most sense right now versus, say, calendar-based rebalancing. We're seeing these massive swings at the sector level, even at the factor level. I'd say stay in gear by doing what we know we're supposed to, which sort of trim into strength when you get it, add into weakness when you get it, sort of stay in gear that way as opposed to trying to anticipate what the next move is going to be.
All right, Lizanne, really appreciate you taking time. Always love your thoughts. Lizanne Saunders, she's the Chief Investment Strategist over at Charles Schwab. Keep an eye here on the markets. We are off the lows of the day. We are going to talk a lot more about that. But coming up, we're going to take a look at what's going on in the deal space. Fixed income, that's going to be in focus. Megan Graper of Barclays.
So definitely, yields are going to reprice a lot of the valuations because of, obviously, that's the risk-free rate that a lot of people use in their DCF model to kind of understand like the premium that companies are going to be making over the market. So the valuations are going to get suppressed a little bit if the yields still keep going higher. But the earnings will have to do the heavy lifting moving forward, right? The earnings have to really, but even then, like big tech, I mean, they can't really please investors on Wall Street. I mean, every time they come in, beat expectations. We saw that with Apple. In fact, we talked about this with Daniel Labs today. They beat expectations quarter over quarter, best earnings in over 6 years, or probably even in the company's history, and yet the stock sold off after the earnings came out, right? So the 10-year yield is a big concern. I agree. Yep, ST, it is a big concern. All right, guys. So I'm gonna actually maybe cut the live stream here. It's 11 past 1 in the morning here, so I'm gonna probably catch some sleep, and then I'll see if I want to do the live stream tomorrow again when the market's open. So definitely check out the most recent video. We spoke to Dana Labs from Redbird Securities, talked a lot about Apple, technology, growth. It's actually a really helpful video in times like these when it was really interesting to know his perspective on the markets. Let's take a look at Procter & Gamble, Corey, really quickly. So just a massive, massive sell-off it has been, right? From all-time highs. It's down a little bit over 13%. And you're right. We could maybe see some bullish divergence for the RSI. I mean, the support that it needs to really validate is going to be somewhat over here, like close to 126, 127, I want to say, because massive resistance coming in from February of 2020, and then we are just kind of hovering around that level, right? But again, look at the moving averages. They play such a significant role for any stock. Like once you break down, it's just so difficult to break out once again. So you'll notice 21 EMA just acting as so much resistance. And this is the daily chart. So we're talking 1, 2, 3, 4, 5, 6 days consistently where the moving average has kind of weighed down on the price and just keeping us down. So breakout over this 21 EMA, which is going to be sitting at $128, $129, is very important. And while the pattern is consolidating, you'll notice that the RSI is not actually making any lower lows again, right? We're potentially making higher lows. So the pattern's moving down, but we are making higher lows. So Corey, you are absolutely right. We are seeing some type of a bullish divergence for the price for Procter & Gamble. So all it really needs to do is kind of validate this 126.70, 126 level. So almost exactly where we are trading, and a potential breakout over this 21 EMA. And then the 200 and the 50 EMA sitting perfectly together at 132. All right, guys, so thank you so much for joining in. Again, check out the Patreon link down in the description below if you want to get access to our Discord, our growth account, and our trading view charts that will automatically sync over to your patterns as well. And as always, if you guys enjoyed this, please make sure to drop a like. It really helps out with the channel. Subscribe if you're new to the channel, and we'll see if I want to start the live stream earlier tomorrow. Oh, let me see. What?
Asset class has done its thing. What's next? And we think crypto could be the solution now.
Really speaking cross-asset there for us. Kathy Wood, of course, ARK Invest founder, CEO, and CIO, speaking earlier on the Bloomberg Crypto Conference. Turning now to deals. Well, fixed income, we're keeping it cross-asset.
All right, guys. So I hope you guys have a great day, great evening, great night, wherever you guys are watching from. As always, I really appreciate each and every one of you guys, and really thank you guys for the support. And I'll do this live stream pretty much almost every day, or every other day I'll try to. So again, stay safe, take care, don't panic, it's part of the market, and I'll see you guys in the next video.